Yeah. So this is Finvis. I think financial visualizations. Uh, this is like a stock screener. You can screen for like stocks. Um, Me, I wanna focus with I wanna start with I usually buy other company stocks like Ford, Yalla Group. I had like a portfolio, like I had like group of shares that I had, like different group of shares that I had, but I ended up selling them when I lost some money because everything started changing, and I'm not sure, but let's see today. Today I'm gonna, as I said, I wanna do 5 companies. I wanna select 5 companies, then go through them, then see what they are doing, analysis on them, then see what you can buy. Mega, these are big companies. Usually their share price are usually crazy, like $200 billion companies, this and more. This like Tesla, whatever, those guys who have like capitalization of probably like $1 trillion, 2 trillion, 3 trillion. So usually their share price, though their stock price is usually overstated. So I don't want to play around these ones. I think they're good in terms of security because like it's a listed company and it's already doing well. It's already like producing product, but I feel like the price is like I was late. Like I should have bought it like early, like maybe I don't know. So I'll go to these ones. Micro under 300 million. These ones. So let's go and see those. Right. Earnings date. We don't care about, but we care about price. We care about price. We're gonna limit our price to, let's use under dollar, right? So we have like 24 different like pages. So this is the companies that we got. So this is the ticker, the company, the sector, the industry, then the country that those shares are listed in. Then we have market cap, price. These are the price for the shares of the stocks. This is the volume, the trading volume. Like, so the bigger the trading volume, the better, But right, so that's what we see. I'm gonna go through some, but I'm not gonna do everything because these are a lot of companies. These are a lot of companies. These are a lot, thousands and thousands. Because every page is 20. Almost every page is 20, 20 by 20, 20 by 24. I don't know. That's a lot. So I'm not gonna go through. Let's see the number. How many are they? Yeah, these are like 467 companies. So there's a lot of companies. So what should we do? So let's start with this one. AACG, Ata Creative Global ADR, Consumer Defensive. Let's look at that company. What we got? This is a daily graph. Let's see the monthly, what the monthly look like, because we just, oh, you see, This is like a choppy market. This market is like choppy, like it's so. But at one point in time, these shares went up to $20. That was good. It went up to $20. It went up to 20. It went up to 20 for one point in time. So this company was doing well. I don't know, but it came from 2013. I think it was established around 2013, if I'm not mistaken, all the way to 2025. Did well in 2021. I think that's when it reached its peak at $19.94 or $19 whatever. That was its highest. Then it started going down, going down. People made money. Imagine if you bought like these shares for like $1, that was like $1.50, and overnight they went up to $20.50 to 20. That's a lot of money. That's a lot of money. If that happens to me, I'll sell immediately. That huge price, I'll sell, and then it went down, up, down, like this is like a W pattern, whatever. This like the trading, like if you use technical analysis, they'll tell you like, yeah, it's a W pattern. It goes way, 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 and it's supposed to go out. But I think stocks you don't need to use, especially penny stocks. You don't need to use a lot of that. That stuff might not even apply, or the technicals, whatever. That stuff might apply to if you're a forex trader or something like that. The stuff might apply, but here I don't think it applies. Let's go index market cap, 29.21 million. Income for negative 4.35 mil. So this company is making losses, I guess. Or is it as a negative? This is negative. Sales 38 million. The sales was good though. I don't know. The sales was good. Because if they sold 39, the sales were good. Dividends, ex debt, whatever, employees 599. Earnings past 5 years 27.78. That's not bad. Quick ratio, current ratio. Okay. These are all the news, I guess. Q1. Let's look at their financials. Reports Q1 with net revenue, net gross profit increase of 5.9 respectively compared to Q1 2024. Beijing, China, Attack Creative Global, an international educational service company focused on providing quality learning experience that cultivate and enhance students' creativity. Today announced preliminary unaudited financials. Those ones are not audited. You never know with unaudited stuff, because companies might overstate stuff, although they've like internal auditors and all that in their companies, but you never know. They're not audited, so we don't know about that. Or amounts presented in US dollars in news release are based on conversion rate of okay. So to dollar, net revenues increase, gross profit increase. I don't think this one is a bad one. Okay, let's see what this company does. Term ECG, net revenue growth. Yeah, their CEO was talking about increasing revenue and all that. Okay, let's see. This is December. Current assets cash equivalents 36,000. This is like 36 million whatever, and the 39. That's good for the quarter. I don't think they did well. Long-term investments accrued. Okay. Okay, what does this company do? What else do we know about it? But I think this one doesn't seem bad. I like it. I like it. I still think this company has a possibility to go back to $2 a share. Still has a possibility of moving from around 91 cents where it is at to that. I think it still has an opportunity for that. Okay, let's do a little bit further analysis. Let's see what else do we got. What else? We looked at that. At the creativity. $0.91, Beijing, China, founded in 1990. It seems stable. It was founded right now. So this company seems a little bit stable. It seems stable. I saw the financials, the increase of here the income, but I think it's not a bad penny stock to buy. 91 cents. I don't think it's a bad one. I'll just put it on the side. Let me write it down. Do I have a pen? Should I have a pen? Okay. This is right. I'll just need to research further, but it's focused on learning and all that. So I think it's not a bad one, but we are not gonna pick it now. It's 90 or 91 cents. But currently it went down negative zero whatever 64 cents. But I still think, because like this market is kind of choppy, but yeah, if you use like if you're a technical trader, you see this, it touches here, then this candlestick is bullish, then it's supposed to go up, whatever, that junk. I still think it's gonna go up. I still think this is bullish. This is really bullish. I still think it's really bullish, because they have like this pattern, whatever, confluence, whatever, like. But I looked at the fundamentals. I looked at the technical. The technicals, because people think if it comes and hit this and hit that, then it's gonna go up. That's what forces it up. I don't think that's the case though, but I feel like this company is gonna go up. So it might be a good buy. I'll see whether I want to invest in that. Let's see how it goes. But I have it on my thing. Okay. Then this one. Okay. Okay. Let's just look at it. Market cap 12.8 mil. Sales 0.36. Blah blah blah. Negative 42. Target price $2. Earnings February 20. Let's see. Let's look at their financials. Prime research from Portland data for showcasing pressure gauge data suggests potential for superior thermal. I don't even understand this shit. I don't know what this is. Some cancer stuff. I don't. I just want to look at the numbers. I like the numbers better. But it's a biotech. I don't know anything about biotech. I just want numbers. Numbers can tell me good story. Bio stuff don't tell me stuff. I'm a trader. I'm an investor. Fuck. I don't know. They don't have a lot of stuff that I can like comprehend the company or a balance sheet. You can look at their assets, so like the AACG company that is based in China. But I don't know. I don't know about this one. It's some cancer stuff that I don't know about. But okay, let's just use technicals on this one because I don't have a balance sheet. The income is negative. They have 6 employees. 6 employees. They have 6 employees. I don't know. That's just something else. Okay, let's just do a research on the company. I don't even know what exactly they'll be doing. Yeah, just whenever you want to make a decision or you want to do these things, I don't like too much complicated stuff. I would like to. They're writing so much complicated stuff that we don't need. We just needed to keep it simple and simple numbers that gives you a good picture. That's what we need. We're not biotech engineers or whatever. We are trying to make money. That's all we need. Let's see what they do. It's a very focus on novel antibody constructs for immuno-oncology and whatever. I don't know what the fuck that is. This is APB, Nasdaq, whatever. Headquarters. Where is this company? I think it's in America. It started 2004. I don't know. But I'm going to use based on what I see. Based on this, let's do a monthly. We want to see how this company has been performing. But you see, I'm not trying to pick up on this company or anything. Since when it was started, I don't know. They say it was started around 2004. Maybe it was listed on stock exchange. I don't even know. But it used to go up. Then it fall from $12 to I don't know, some cents. So I don't want to buy this one. I don't want to buy. Just based on my analysis, I don't think I'll buy this one. I don't know. I have a bad one for this one. No, I'm not buying this one. So this one, no. I'm not buying. Yeah, but this one is a buy. I think this one, it has low volume though. This one is a low volume. Like the volume is really low. It's a Chinese company, but I think this one is it has some potential. This one is like large volume, maybe large volume, but I don't know because it's been on a downtrend. Unless you are selling it you go like bearish on it, you go and sell it. I guess going bearish on it, bearish whatever on it. I think that would make sense. But I don't want to buy that one. This one is low volume though. But it is high potential because when we looked at that stuff, it told us we saw that it increased its profitability increases, then their whatever CEO, whatever was saying stuff about increase. So I think based on fundamentals, that doing good one. This one based on technicals, I don't know. I don't want to buy it. I don't want to risk it. So I'm not gonna list it. Then let's go to this one. This one. You see, it seems on going on a downtrend, whatever. Yeah. Using technicals to break. So people start buying it maybe, yeah, but this one seems like it's on upper trend, but this one as well, like a daily chart. Let's look at the monthly to tell us everything that we need to know. Oh, see, this company used to their shares used to be worth like $132 around 2018. It fall down to damn. Now it's like damn, it fall down. I don't know. I don't know if it's a good sign. Their market cap, income negative 117. I don't know. Employees 152, 6.7%. PB ratio 0.36, PC ratio, quick ratio 9.34, current ratio 9.34. I don't like their ratios. I don't like them, for real. I don't like them. When we were in school, when we were doing accounting, our ratios used to be like 1:2, or like 2:1. Like current, like those quick ratios didn't need to be like too high, like, because current ratio is like maybe cash available, like cash available or assets that are available, like that are quicker, that you can sell to pay off your debt, like your debts quicker, like to pay off your like your current liabilities quicker. So I don't like this. I think this is kind of okay. Let's do this. I forgot about current ratio. Let's current ratio. Let's see. So it's current assets over current liabilities. So current liabilities goes into your current assets. So let's say you have 8 current assets over 2. So 2 into 8, that's 4. So the ratio is 4. So this ratio is good. Yeah, so this ratio is good. This one. So this ratio is good because it's current assets over current liabilities. So this ratio is good. It's good. It's not a bad ratio. I think when they are all in green, these are good ratios. So these ratios are good for this company. Earnings per share 36 point. So all these greens, I think they are good. That shows they're good because I checked. So which means current ratio, they can pay their current liability 9 times. So they have, I think they have liquid quick money to spend. So I think this is a good thing. Here I don't know about ROE, return on, this is return on equity, return on assets, ROI, return on investments. These are all negative though, these ROIs. So buy. So what do we have here? Buy. Okay. I don't know. This one seems like it's been on a downtrend though. It's been on a downtrend. It's been going down since 2018. It's been going down since 2018. It's been falling. Yeah, it seems like it's gonna stabilize, but I don't know if we're gonna change that, but I don't know. But these ratios are good. This one is good. Target price, I don't know. This one, no. Okay, let's see the news. Let's see what they got. Let's see if they have a balance sheet or whatever that we can look at. First quarter reports. Let's look at their first quarter reports. Let's see what they got. Phase 1 clinical video, whatever. Net loss for 3 months and then 28.2 million, or a net loss of diluted. Let's research and development were 28 million for 3 months and 31 March compared to 23.9 million during the same period in 2024, which means they used less on research and development. The decrease was primarily due to net decrease in expense related to contract development manufacturing organization, the externally conducted research and development. The general and administrative expenses were 7.1 million, 7.1 and 7 million for 3 months and net loss. So net loss for 3 months. Where did this net loss came from? Do you think it came from? Because from what I know, from the accounting perspective, a research and development, sometimes those expenses, I think some might be capitalized, not really capitalized, or they're like amortized over a period of time. Because like most of these, like, they're big expenses that can make a business like okay, let's look at that. Let's see. Operating expenses, research and development, 22 million. That was 2025. Yeah, that's good. Then they have this 23,897,000 general administrative, total operating expense 29 whatever. They used less though. Okay, so that's a comprehensive loss. So that's what made them to have like a huge loss. I think most of that money comes from their research and development. That's made this company to have like huge amount of losses. So if they're doing their research and development and they're not making money since 2018 or whatever, I don't know. It might be a good company though, but I think they're spending too much money on research and development. I don't know what's their nature of business, but using numbers, no, I'm not buying. It's been in a low trend for like quite a period of time. I don't know. I feel like if companies do those research and development, they should make them in such a way that they should generate their money back, not just taking a lot of money to do research and development and you generate a lot of losses. So I'm not buying that one. Sorry. This one no. So this one no. So let's look at this one. I don't know, pharmaceuticals, whatever. I have like 3 pharmaceutical companies. Damn, bro. Man. That's the bad thing of reviewing these companies that are like these small companies, like they start on a downtrend. Let's see what we have. Yeah, it was on $9. This was like a huge spike, then it went down, then wow, maybe maybe going back, but I don't know. With this, you need to see their shares are 40 cents. 40 cents per share. Okay, their market cap is 9 million. The income is negative 87, 1.91%. PB ratio 388, PC 2.02. So their current calculation. This is not too bad. They can pay their current liabilities 2 times. Earnings per share surprise 5, whatever. Earnings per share, all this, the earnings are all negative. Damn. Within 5 years, it's 14 point. So you need to invest it in a long time. But I don't know. This one I have a bad feeling too. Let's see their quarterly reports. Today has first whatever. Let's see their first quarterly reports. Let's see what they got. First quarterly, let's see. Man, where are the figures? I want numbers. I don't even know what you guys manufacture. I just want numbers. That's what tells me a story. For international phase therapy, treated patients with C. diff infection, CDF. Sanofi administered being developed as a gram-positive spectrum antibacterial is the first move of new class of DNA. Poly whatever. Bruh, I don't. I'm not a biologist or something. I don't know these stories, but I'm gonna just use what I see. Like, I'm just gonna use the graph, technical analysis. Since I didn't see like any financials. Let's see. Let's try to look for any financials. Yeah. Oh yeah. Let's see. This one is for 2024. Yes. Oh, okay. Okay, let's see. This is 2024. They had cash 3 million. 7 million. Other receivables, prepaid expenses, current liabilities, accounts. Yeah. Total liabilities, commitments, and contingencies. Potential for outstanding. Okay. This is like their balance sheet. Accumulated deficit. This is a lot of deficit, bro. Around 67, almost 67 million, 53 million. No, that's a lot of deficit. 2024 loss per share. Yeah, because this is 2023, 2024. So in 2023 it was $15. So now it goes to 2024. It was 87 cents. And now it's almost 60 something cents. Let's see now. Now how much? It's 40 cents. 87 to 40. So it lost a lot of. No, I'm not buying. Based on what I see, what I read, I'm going to do this one. I'm not gonna buy this one. Let's go to, so like all these three pharmacy, all these three companies, 1, 2, 3. I'm not buying this. So let's look at this one. Whatever. This company. Oh, this one is in the UK. Let's see. Damn, it's on a trend of negatives. It's 28 cents per share. Yeah, this one seemed like it was going down to 72 million, income negative 69, sales 180.2 million. They made a lot of sales though. I don't know how these healthcare companies, I think they spend too much money on research and development. Like, if they could do research and development cheaper, I think they will be like, okay. I think they spend too much. They need to find ways to reduce, because you don't want to like spend too much money on research and development before you even make the product, or before you even, I don't know, I know less about that. I won't like complain about that or whatever. I will just use my numbers to do what I do, then I'll move on. I don't care about. Okay, let's see revenue guidelines. Full year Tekla sales predicted between 35 million to 45 million. Net sales 4 million from Tekla treatments. Tekla treatment invoice 14 treatments in 2025 to date. 14 treatments in 2025 to date. I don't know what exactly they're treating with 6 in quarter one. So they kind of did well. 6 in quarter one in 2025. Oh. The centers currently accepting referrals with target of appointments studied by the successful use Tekla manufacturing center. Peak sales projects 100 million from combined Tekla and let's say whatever positive wins. Of course, these are what the company writes about their thing, because they just want to keep their company running. It used to be $22. 18 4 down, then 20 here, $22. What the heck? It shows like, yeah, I don't know. Yeah, I want to see the man, these companies will be trying not to give us where is this judgment or something? This one is in the UK. Let's look at, I don't know, from $18 to 28 cents. That was like a decrease like crazy. That's why I was like, I don't know, I'm not buying this one too. That's a good, it's in the UK, but I'm not buying it. I'm not buying it. Okay, so let's look at communication service, ADD, entertainment. I don't know what these guys do, but I think it's related to entertainment. Let's see. No, let's look at their monthly. Let's see. They've been on a downward trend though. Okay. Let's see if they have anything that we can market care. They made a loss of negative 26 million or 27 million. Sales 2.83 million. Okay, scroll the statement. Cost of goods 6.2 million, and you made a total revenue of 2.83, and you use 6 point. That's crazy. Negative gross profit, selling in the damn, bro, and they're like negative 27 million. That's crazy. No. Usually these companies, and it's been like declining for long, so I don't want to risk it. I'm not buying this one too. I'm not buying this one. I'm not buying this one too. I think I did ADD. That was a communication service. Healthcare companies. These are a lot of these. We have a lot of these monthly. Damn, it's on a downward trend. They have a good quick ratio. It's not too bad. It's like 2. For every dollar liability you have, you might have maybe $2, whatever, or $1.99, which is not bad. For every like dollar of current liability you have, you might have like $1.99, or you can liquidate these assets to pay your liabilities. So, yeah. Let's look at the financials. First quarter, what do they have? Okay, let's see. Cash and cash equivalent 2.4 million as of March, compared to 3.8 million December 2024. They had more money last year than 2025. 3.8, now they have 2.4, including the proceeds from the warranty exercise. I believe that its existing cash and cash equivalent fund its operating expenses in the fourth quarter of 2025 based on currently committed development plans. Or they want to make the money that they have to fund their last quarter of 2025, which means by the end of 2025. Okay. Research and development expense increased approximately 293,000 during the 3 months ended compared to 3 months. Research and development. Yeah, these health companies, they have a lot of R&D like expenses. They're crazy. Like they have a lot of them. But if you, when we did accounting, like when I did accounting, I think we had like different types of research and development. Some of that, like you should amortize it over time. I don't know, like American standards, but I think with like IFRS and IS International Accounting Standards, you might amortize them over time or something. I forgot what there was. Research and development. Yes. Treatment. Let's see how they're treated with international accounting standards. Or they treat it's an intangible assets. Research is defined as the original plan, blah 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 blah. Under IFRS accounting standards, IS 38, research are expensed, however broad requires a company capitalized. Oh, okay. So you have to meet like a certain type of criteria or whatever. But usually, so they're expensed. Under IFRS accounting standard, research costs are expensed. Okay. So I think most of these pharmaceuticals or health companies, they have a large like research and development. So I think that's why they have like a lot of like negatives. Like if you look at their expenses, they have a lot of expenses. You know, because it's hard to develop stuff. I guess it's hard, or it consumes a lot of money and all that. So we are not buying any healthcare for now. This one's that one and this one. Let's look into real estate. I like real estate. Let's see. Let's look into real estate. Let's change to monthly. No, let's do monthly. This one was going down. It's damn. See, it used to be like 500 or whatever. Is it? Yeah, I think it went to 500 or whatever. and it dropped all the way. Damn. I feel bad for this company. What do we have? Market cap, it's a $10 million company. Income negative. So usually when income is negative, that's when when you have your COGS, your cost of goods sold is usually greater than it's either your revenue. So your revenue might be less, or you have a lot of expenses that would take that gross profit down. So probably this is caused by this might have been caused by